Hello everybody, and welcome back to another video. Let's get right into this one and discuss how we can build a trading model. As you can see here, these 3 points are my main components to building a trading model, especially as an ICT trader. So number one, first and foremost, we need to have a clear draw on liquidity. If you are looking at the market, if you're looking at a fractal of price, regardless of time frame, and you're trying to get involved, you need to ask yourself, is there a clear draw on liquidity? And if that answer is no, then you do nothing until there is a clear draw on liquidity. Now, number two, manipulation/time. I've grouped these two together, and this will make more sense as we progress throughout this lesson. But after we have established a draw on liquidity, we want to see clear manipulation during specific times of the day. After we have a clear draw on liquidity, after we see clear manipulation at the correct time of day, we utilize a high probability PD array to enter our position. So if we continue forward and lay the framework before we get into the actual charts, let's assume that we are bearish and that we are targeting a session low. Now, a quick note on this, session liquidity is virtually what I target, but also use to frame my narratives, whether I'm targeting or requiring one to be swept for manipulation. So if I'm bearish, I'm looking at something like a London low, an opening range low, a previous day low, a lunch low. If I'm trading the afternoon session, a previous day PM session low. Session liquidity is so powerful for, of course, trade targeting, but also just beginning to frame a trade narrative. So with this framework, let's assume that we are looking at a session low, and the main framework for the price aspect, if you will, of looking at a fractal of price of building a trading model is at its core accumulation, manipulation, and then distribution, which I'm sure most of you know and are aware of. This is also commonly referred to as power of three. So we're going to utilize that here as our main framework for high probability setups, but we're also going to add the time factor to it to get a very, very precise idea of what we are looking for when we are trying to engage in the market. So as you can see here for this graphic, this visual representation on top of the charts that we'll see throughout this lesson, we're going to assume that this is a 1 minute time frame. Now, the power of three stuff applies to all time frames, but this more specifically, as you can see, I'm going to work with and describe how I can utilize the macro windows for high probability setups. So if we're looking at accumulation, we want to see that occur, but when do we want to see it occur? Pre-macro, so before a macro window. So essentially, the thinking behind this is that we want to wait for the algorithm to be told that list of instructions during that macro window. And that's when we want to see the market start to manipulate, as we'll see in a second, and offer us our setup. So we don't want to see a bunch of volatility before the macro window for the best case scenarios. We want to see that accumulation pre-macro. And then as we enter that macro window, we want to see that manipulation take place. So you can see I've added this annotation here. Lower time frame liquidity. Now, why is that important? If we're initially, as we start to frame a narrative, a bias, a trade idea, targeting a session low, we want to see as much engineered lower time frame liquidity left behind for us to target as well while the manipulation phase is taking place. And again, when is this manipulation phase taking place? During a macro window. So we're seeing it run the highs of an accumulation phase, but leave behind the lower time frame sell side liquidity falling short of a session low. After that manipulation has taken place, we look for the distribution to get involved and utilize a high probability PD array for our entry. So if we get into this 1 minute fractal of price here on NASDAQ, first and foremost, we're looking at what time window? The 6:50 a.m. macro window. So of course, that time window is 6:50 to 7:10 a.m. Eastern time. That is when we want to look for macro power of three concepts to come into play. Now, if you haven't seen my video on macro power of three, you'll see it up in the upper corner here now. that is basically the framework of how I look for the best of the best setups. It's not the only way I engage with price, but if you want to look for high probability setups and a more in-depth discussion on macro power of 3, be sure to check out that video. Now, let's focus on this fractal of price. What are we seeing before this 6:50 a.m. macro? We're seeing the market in consolidation, or what we described before, accumulation. And that's what we want to see while we are waiting to enter a macro window. So if we see clear relative equal highs, sell side liquidity here, sell side liquidity here, and of course, this high here, but of course, looking lower, what we discussed in our first visual representation, we see a session low, and in this case, it is London low. So we want to see lower time frame liquidity built, and then that manipulation phase taking place. Now, if you see this lightly shaded gray line coming across the chart here, labeled MO, if you see it on my charts or any of my students' charts, it stands for macro opening price. So it's just a more refined extension of the logic that we've already discussed. If we are looking for a short setup and we want to see manipulation during a macro window, I want to see price go above macro's opening price, sweep buy-side liquidity, and then show us signatures of a reversal. Now, I'm going to talk about this high probability bearish inversion in a second, but first, a simple question to ask yourself if you are trying to identify a reversal point is, in this case, since we're looking for a short and a bearish reversal, after the manipulation phase is taking place and has occurred, aka a run on this high, how do we put together the narrative and try to understand if this is a real push and now we're going to continue to this high and this high over here, or if this is a liquidity sweep and we're going to reverse for the opposing range liquidity, again, this lower time frame sell side, and ultimately this London session low here. Well, a simple question to ask yourself is, okay, we're running highs. After that is occurring, do we see signatures in price that would suggest that bullish order flow is starting to fail? So what does that mean? While we're coming up here, you're looking at bullish fair value gaps, bullish order blocks, bullish PD arrays in general, and saying, okay, are we seeing price, if we do return into them, show any willingness of finding support there? And what do we see here? No. After this buy-side liquidity is swept during a macro, above macro opening price, we immediately displace lower here, closing below this BISI, and this BISI here. Now, why is this BISI I have labeled as a high probability bearish inversion of significance to me here? Very slightly, it was utilized to send us higher for this manipulation phase. So what was its initial state of delivery? Bullish delivery. So if we were to continue higher and return to this, would we want to see a candle close below? No. So that is a sign that a change in the state of delivery is occurring. Bullish order flow is starting to fail to support price after the manipulation phase above macro's opening price. So if we have this type of high probability bearish inversion, once we close below it, as you can see with my annotation here, it not only validates this as a high probability bearish inversion, but any inefficiency above that, we want to see left as a breakaway gap. We don't want to see price return to it. We want to see that signature of weakness hold true. And the markets show you it doesn't care per se to come up to this SIBI. It just wants to utilize this high probability bearish inversion to attack lower sell side objectives. And that's exactly what we see here. Price closes below this BISI that was utilized to send us higher. It comes back up into this high probability bearish inversion. The bodies are respecting this. Price is failing to reach this SIBI up here, and we expand lower. Now, I posted this recently on my Twitter. I've discussed it briefly here on the YouTube channel. Just the terminology I utilize to identify and classify breakaway gaps. So you can see I have this as a smoke screen. So a perspective that helps me out and a lot of my students and traders I come into contact with when discussing how I can identify and anticipate a breakaway gap is look at things like this high probability bearish inversion as a smokescreen, right? The algorithm, it's not going to see per se that there's a SIBI up here. it's just going to look at this smoke screen and say, okay, I'm going to refer to this, but I can't see this. So it's going to come up here and go lower, right? So that's just the perspective, the terminology, if you ever see this on my charts. And as you can see here, we do use that as resistance, if you will, fail to get up to the breakaway gap, and then not only get this lower time frame liquidity, but we come down to London low. Now, on top of this, what do we see here? I'm looking further, not only as this entry method right here, this entry PD array, this high probability bearish inversion, but beyond that, I'm looking back and saying, okay, was there anything else that was utilized to push us higher? And if so, we're using that same logic with the initial entry high probability bearish inversion. And we want to see the same signatures in price hold true. So you can see this BISI here was utilized during the macro to not only engineer liquidity short of this lower time frame liquidity, and of course by extension this London low, but it was utilized to propel us higher while the manipulation phase was taking place. The same logic as we utilized with this BISI here. So once we close below it, any retracements back up into that BISI, I want to see price reject from. Okay, and in this case, there's no inefficiencies above this lower high probability bearish inversion, but the same logic would apply. If there was, I'd want to see that left open as a breakaway gap and us expand to our next sell side objective. So continuing forward, we're going to look at very similar signatures in price. You can see that now we're operating within the 10:50 a.m. Eastern Time macro. This is still NASDAQ's 1 minute chart. And I'm sure a lot of you from today's price action were looking at this delivery. Okay. So first and foremost, what is our priority? A clear draw on liquidity. Now you can say, okay, well, why are you identifying this sell side liquidity pool that I'm hovering my cursor around and that you see annotated right here? Why is that a likely high probability liquidity pool for us to target? You could say, why didn't it just come to this low in reverse, or this low, or this low, or how did you even know it was going to slice through here, right? Why was this one of interest? I will discuss this in the next slide. But first, right, we're identifying a clear draw on liquidity, the sell side liquidity pool. We're seeing price go higher and higher and higher. And what is it leaving in its wake? Not only this low as well, this low here, this low, this low, this low, this low, a lot of engineered sell side liquidity. So we, first and foremost, before we even talk about the reversal point up here, algorithmic signatures, entry points, we can start to see that. We can reasonably say, okay, if we start to see manipulation, then a reversal, yes, there is clear sell side liquidity for us to target. Okay. So as we continue higher and higher, we're entering the 1050 macro. We see price go above macro opening price, okay? And you can see that the reversal point takes place a couple minutes after macro's opening price. When you see this, whether you're trying to identify a reversal and or get involved here on a short setup, it's fine if this is occurring after, okay? The main priority is number one, draw on liquidity, number two, manipulation. And then if you do get that high probability PD array entry afterwards, I'll still take a stab at that and enter that, right? But you want to see clear draw on liquidity, clear manipulation. What you can see here is that price is reaching a new high here, sweeping buy side again here, okay? And you can say, well, after we swept this buy side, why didn't you go short there? There was no confirmation that bullish order flow was failing yet. If we had closed below this BISI, then that's a valid short. But the bodies tell the story. Did the bodies close below there yet? No, so it wasn't time. You wait for the setup. We go up one more time, purge this high once more, and then what do we see? We see this BISI get closed below. We displace through that. We continue lower and close below this BISI down here, this orange shaded BISI, same as the previous slide. Why do I have this labeled? Why do I classify this? Why can I confidently, while price is printing live, say this is a high probability bearish inversion? This is what my students and I look for and see on a day-to-day basis in the marketplace. These are the signatures that we look for. This BISI, plain and simple, utilized to send us higher. On top of it, SMT, as you can see here, just makes any setup higher probability. The BISI was utilized to send us higher. when we return back to this, if we're going to see us go higher, do we want to see a candle close below? No. So when we close below that BISI, it validates this above SIBI as a breakaway gap, and we want to see any retracements into that inversion offer resistance and push price lower to the next objective. What's the next objective? Well, you have these internal lows here. You have this BISI here. Same logic was utilized to send us higher on the buy side of the curve. We want to see price close below that, not only to convince us that we are more likely to get the continuation down to our terminus, our final target, but we want to see those same signatures hold true. Close below, any retracement into it, we want to see it push price lower. And look what it does here. There's a SIBI above that high probability bearish inversion. Does price come back up to there? No, it's a breakaway gap. It's only going to refer to this high probability bearish inversion, and we want to see it expand away from that. So we're looking at the same signatures in price. We're reading price the same way on a day-to-day basis. We're just trying to identify a clear draw on liquidity, time, manipulation, and reversal signatures. So again, after you see us run highs and you're putting together the narrative of, okay, we have a lot of sell-side liquidity, you're just waiting for bullish order flow to start to crack, to start to fail, to see candles close below what should support price if we are bullish. So continuing forward, this is the same fractal of price that we just looked at, I just zoomed out here. Okay? And I mentioned, why was this sell-side liquidity pool a high probability target? You can see that I've ran the dealing range for the intraday session. So if you utilize the intraday dealing range, it's going to do you a lot of good with targeting and with narrative, with your expectations, with everything, just to get that dynamic dealing range as the intraday session is playing out. So you can see here, this blue line, that is 930 open. Right away, we go lower. So we form this low. This is the low of the intraday session. This is the high that we just discussed here with the turning point. So this would be your intraday dealing range high, intraday dealing range low. And if you enter a short here, you want to look back at the left side of this curve and say, okay, are there any liquidity pools and or inefficiencies that are residing at equilibrium or right below? What do we have here? Swing low, that's a sell side liquidity pool. Where is it? Right at equilibrium of the range, but also it's right at 930's opening price. So this is a highly sensitive area that if we are correct about our narrative that we've built, right? All the sell side liquidity, manipulation, and this turning point, bullish order flow starting to fail, regardless of if price is going to get down all the way to this intraday dealing range low or not, we can target this sell side liquidity pool as a more conservative target. And this is even, still a great move as a more conservative target to expect price to deliver to, right? Again, sell side liquidity, the swing low, right at equilibrium, right at 930's opening price. Reason for price to get down here. Now, you can say, well, if we're entering short on this 1 minute high probability bearish inversion, are there ways that we can get involved up here if we're not getting this return to this inversion up here that I don't have labeled but right next to my cursor? Let's go down and look at something fascinating on the 30-second time frame. So we're zoomed in a bit on the same fractal of price as you can see here from today's 1050 macro. And we're looking at these same signatures. You guys are hopefully starting to see how powerful these signatures are in price, not only in your ability to read order flow, but being able to see which fair value gaps should be left open, be classified as breakaway gaps to not expect price to return to these. So we're dropping down into this 30-second time frame. And do recall the narrative that we've built on the 1 minute time frame. It's virtually the same thing here. You see a bunch of lows, right? You see the sell side liquidity pool that we just deemed as a high probability liquidity pool because of equilibrium, because of the 930 opening price. Okay. But if we're looking at this turning point up here, I'll only drop to the 30-second time frame if I'm really, really looking to get involved. Of course, we always want to be like that in our trades. We never want to force a trade. But if we have 1 minute structure that I don't suspect that I'll get an entry on, I'll look down to the 30-second and just look for any sort of entry. So as you can see here, we have this upper BISI that was utilized to send us higher, hold the SMT. So even though it's a small push here, it still ran the swing high. and its initial state of delivery was bullish delivery. Once we close below it, come back up into it, we can utilize that to go short. Or I've mentioned this before on the channel and to my students. If we close a couple points below an inversion, in this case, I will just market order if I've already built a strong bias here, a strong narrative, a strong idea of what I believe price is going to do. And then I'll just accept that couple points of risk. Now, if we were to just close all the way down here, 10 points or more, I wouldn't just market order. I would wait for a retracement or wait for more structure and then a more clear entry based on the logic and the entry methods that we discuss on this channel, in the mentorship, in the free Discord, et cetera, et cetera. But if we have this 30-second time frame that we're looking at, we're reading this order flow the same way. Price closes below. This SIBI, do we return back to it? No, we leave the upper portion of it open. So that's a breakaway gap. We expand lower. We're doing the same thing, looking at the left side of the curve and saying, what was utilized on the buy side of the curve while the manipulation above these old highs was occurring? This BTC here. See how the body respected that to propel price higher, to sweep these highs? What happens after we close below it? We come up into it, breakaway gap above here, and go lower. What's the next objective? This BTC that was utilized to send us higher. We close below it. What happens? Come back up into it, reject. Come back up into it, reject. Same logic. If there was any inefficiencies above here, I wouldn't want to see price go back up into there, and you would classify them as a breakaway gap. Beautifully, this high probability bearish inversion sends us lower to do what? Close below the next objective. What is the next objective? Look to the left side of the chart over here. This BTC was utilized to send us higher. We want to see us close below there. Any retracement push us lower to the next objective. Look at the left side of the curve. This BTC was utilized to send us higher. Close below there. If we were to retrace here, of course, we're not going to get the retracement every time, but you're still reading it and expecting the same things in terms of signatures in price. So we close below it and we expand to that sell side target. Okay, so thank you guys for watching. I hope you guys enjoyed this video. I hope you guys can see the power of looking at price and the signatures that we see on a day-to-day basis, like we discussed and witnessed in this video, and that I'm sure a lot of you witnessed in the marketplace today, right? High probability bearish inversions, knowing when a fair value gap should be classified as a breakaway gap, okay? Now, all of these more advanced signatures, they should be coming into play, and you should be looking for them after what we discussed in the very beginning of this video. Draw on liquidity. If you do not have a clear draw on liquidity, or if you have equal highs and equal lows above and below market price, you wait for there to be a clear draw on liquidity and then clear manipulation, and then you utilize those high probability entry techniques that we discuss within this channel, within RTO, which is the private group, and within just all of my socials, what you see in my Twitter. Okay, so thank you guys for coming back to another video. As always, if you guys have any questions, let me know in the comments section, and I'd be happy to get back with you, and I will talk with everybody soon.